So as technology evolves, I think that it will be a challenge for the existing railways in payments, maybe a challenge for the way that we trade in markets as it gets digitalized. So I think that is something that is real, and it will take time until banks and the proper regulation for banks to be part of this ecosystem in a substantial way.
Bill, you've been quite outspoken about the potential for stable coins and tokenization. The market is small now. What would it take to go to the breadth and depth that you see in the future?
Yeah, the market is small today in traditional finance. It's, there's trillions of dollars trading in the DeFi world.
I think there were $27 trillion last year traded in stablecoins. That's more than Visa and Mastercard combined. It's not that small.
Carry on.
Yeah, good answer.
No, that's all good. I was defending your point, Bill.
We always agree. This is a problem. There's a ton going on. Obviously, it's anchored in the crypto world, and that's where it started, and it's growing. And as Daniel said, the technology is the same. It ports from the crypto world into the TradFi world. We're at the earliest stage of the incorporation into the TradFi world. And I think it's inexorable. I think money will become entirely digital over a period of time. That calls for an entirely new infrastructure, which is being built. It will grow out of the crypto world. It comes with tons of challenges. And how we get from where we are now to where we're going to end up is a huge open question. None of us have any idea exactly how this will evolve. And I think all of us have a high conviction that it will. Which means that we need to sort of hand-in-hand cooperation with regulators and with each other in the market to create an infrastructure that's safe. And I'm going to be super sycophantic because, well, for two reasons. One is we're regulated by the HKMA. It may surprise you to know. Our name is on the banknotes. We care a lot about what happens in Hong Kong. And the HKMA has been super progressive in this area. Not because Eddie and Arthur and team have any better idea exactly how this is going to develop, but because we just know it is. So we're going to have to try different things. So tokenized bank deposits here in Hong Kong dollar stablecoins, maybe at some point a structural connection through to the RMB. Obviously not on the agenda at the moment, but it could be, and this would be a really natural place to experiment in that regard. And I think that's the way to progress from here is a little bit trial and error where the errors don't cost you the system. And but the use cases are developing around us in an incredibly fast way. And the non-bank players, of course I completely agree with Daniel's observation about the Basel rules. I think it's almost insane to allow a financial system to grow out and intentionally keep the banks outside of it. So the one entity that regulators can look through and see through and understand where the systemic risks are building up or where the operational risks are building up, that one, like we're spies, right? That's what we do. We watch markets, we report back to the regulators. It's insane to keep the banks out. Now, the HKMA obviously is bringing us in as progressively as any regulator in the world. Maybe that's going to happen with the Fed. Maybe it's going to happen with, as the Fed and the US regulators promote post-Genius Act reforms. Other places like Singapore are doing their bit. But the...
Thank you, Bill. Let me go back to Daniel on that. If we see that moving forward, what does that do to the traditional model of financial intermediation for banks, et cetera? And how are you foreseeing that?
Well, as I said, I think that on the payment side, assuming that there is some way that regulation is not too fragmented, I think that it will have a role, stablecoins will have a role in very fast, very cheap, very effective global payments and transferring money from one place to the other. I think that tokenization of deposits, or tokenization of assets, if it gets to a point where it's properly regulated, is within the regulated space, and is done at scale, it will change what are the current rails that we use today as in payments for markets. So I think that is way too early to know. But it feels now that probably the tide is turning from being something that we've been experimenting for years and years and doing little things. I think that now is getting to a point where most likely will escalate and hopefully escalate, as Bill said, within not just in the unregulated space, allows the regulated entities to be an important player. So therefore, if everyone will be safer in that space and we avoid the problems that we normally have when new things come into the market until they settle down. So we will see. It's still a long way to go, but I think that is real now.
And Jenny, how do you see bank and non-banks working together or not enough to unleash the stablecoins, tokenization, etc.?
Well, I'd rather talk about blockchain than just stablecoins, because I think stablecoins is one, it's the current use case, but there's so many other use cases. So just kind of the question on sort of how does this impact banks? You know, if you think about today, what does this technology do? This technology has an immutable record of who owns it, right? So huge amount of money is spent in the industry reconciling data between systems and then reconciling data with the counterparty. There you have one source of truth. You know exactly when it's relevant as soon as a transaction. The smart contract can trigger it and you get paid. So if you have atomic settlement, which means you get paid, you don't have to worry about who the counterparty is because it's wallet to wallet. I don't need to go to JP Morgan Chase to do a foreign exchange contract and worry about who the counterparty is if, one, the counterparty's wallet has been approved, whitelisted, and my token can only go into that wallet. Transaction and say, where am I adding value and where does this eliminate? And it'll take time to happen, but I think because it drives down costs, it's much more efficient, it will inevitably happen.
Very good. And one last question, Bill. You talked about cross-border. And part of this proliferation, if you will, of each jurisdiction constructing its stable coins has a couple of things. It's the reserve currency of one or the other, and its interaction for cross-border payments, etc. How are you seeing that, Bill?
I think that's first of all, as a toll taker, I'm sure that Jenny had me and Daniel in mind.
You know exactly where you're relevant. You'll continue to be relevant in those.
The cross-border payments are the obvious use case because they've certainly for other than very sophisticated institutions, they tend to be slow and expensive, and less and less slow, less and less expensive, but nevertheless not 24/7 real time. So a lot of the use cases today are, for example, port operators who want to get the ship out of the dock on a Saturday, and they don't want to have to wait until Monday or Tuesday when the payment clears. Very, very simple use case, but a cross-border payment. It could also be a local payment. In the absence of any regulation or in the absence of any alternative, those transactions will be, the cross-border payments will be conducted using US dollar stablecoins, right? Because they're there. There's 280 billion of them out there.